How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel solely dedicated to investing in my very own personal journey to amassing $100,000 within my Vanguard brokerage account. Now, if you are brand new to the channel, video to video, I'm constantly keeping you guys updated as to where my account is currently sitting. The market has been up, down, left, and right, and everything in between. This past Friday, we did take a bit of a hit where my account fell by $1,381.01, which brings my account total to $92,336.33 in the day. And in terms of today's video, I want to get right to it and talking about the 13 dividend paychecks that I've received throughout the entire month of March. It has been another record-breaking month,
and he saw that it was good.
So I'm incredibly excited to share all of these dividends with you and just show you through the power of dividend investing. Now, before we dive in, tap on that thumbs up button and help me grow this channel. And of course, if you haven't done so already, make your way over to subscribing to the channel. I'd certainly love for each and every one of you to be on this journey with me. Now, YouTube, let's go ahead and dive right in. So we have 13 total paychecks to get to in today's video, and of course I'm going to cover each and every one of those paychecks, but I'm also going to be covering my thoughts on these companies and whether or not I'm actually going to continue to double down on these particular investments. Now let's go ahead and dive right in to cover all 13 of these paychecks. Going back to the very first of the month, we had our very first dividend paycheck come in. It came in from the fourth largest bank within the United States. We are talking about Wells Fargo, ticker symbol WFC. Now Wells Fargo was founded back in 1852. It has certainly flourished over the years, building up an empire of over 4,000 locations, over 12,000 ATMs spanning all across the United States, and it has a current market capitalization of $185 billion. Now, in total and complete transparency with all of you, I personally sold out of my position with Wells Fargo as I saw a better suited position with a different bank, which I'm also going to be covering in today's video. However, I originally made the decision to invest in Wells Fargo when they fell back not only from the March lows of 2020 because of the pandemic, but they were actually hit and of course in the spotlight for their account scandal. Now, Wells Fargo, in my opinion, just can't seem to stay out of the press when it comes to a negative spotlight. That is exactly why I've sold out of my position. So at this point in time, I do not hold any shares worth of Wells Fargo. However, they have a dividend yield that is sitting at 2%, which allowed for me to receive a dividend paycheck from Wells Fargo for $9.41. And if you do want to get invested into Wells Fargo, this is not to say it is necessarily a terrible investment. And a matter of fact, with the current PE ratio sitting at 9.85, it is actually quite the right time to get invested into Wells Fargo if you're planning on doing so. Moving right along to the second of the month, we're going to be talking about Fastenal Company, ticker symbol FAST. Fastenal Company is North America's largest distributor of fasteners. Now, if you're sitting there thinking, what the heck is a fastener? We're talking about anything from nuts, bolts, drill bits, plumbing supply, hardware, abrasives, and adhesives. Fastenal has been in business since 1867 and has certainly been growing steadily along the way, with a current market capitalization sitting at $34 billion. They are a lesser known, lesser spoken about, but incredibly lucrative investment in my opinion. At this point in time, not necessarily ripe for adding to your portfolio as it's sitting at a 37.23 PE ratio, which is a bit too high in my opinion. However, if you are to get in at the right price, it is a great dividend stock to have within your dividend investment portfolio. At this point in time, I only hold 3 shares worth of Fastenal Company. They have a dividend yield sitting at 2.09%, which allowed me to receive a dividend paycheck for 94 cents. Now, just 5 days later, we had yet another dividend paycheck come in. This one came in from Southern Company, ticker symbol SO. Southern Company is America's second largest utility company. Since its founding over 77 years ago, it has amassed a massive customer base, serving over 9 million customers within 6 different states. And it has also amassed a beautiful market capitalization sitting at $78.58 billion. Now, heck, when it comes to utility plays, they're some of the safest investments that you can actually make, just given everybody is going to be paying their utility bills. And as long as they continue to do that, well, we're just going to continue to reap the benefits of being a shareholder of such a rock solid dividend investment like Southern Company. Now, while they haven't necessarily been paying their dividend year over year consecutively and increasing it, making it an aristocrat or king, they have been paying dividends out since 1949, which should give you some certainty that that dividend is going to continue to be paid out. Their current dividend yield is sitting at 3.64%. I currently hold 10 shares worth of Southern Company, which allowed me to receive a dividend paycheck for $6.69. $2.29. And then the following day, we received a dividend paycheck from Johnson & Johnson, ticker symbol J&J. Now, I am sure I don't need to go far into detail about Johnson & Johnson. They are a world leader when it comes to the healthcare industry, leading the way in pharmaceuticals, medical devices, and consumer goods. They've been doing so since 1886. That's 130 years worth of revolutionizing the healthcare industry. And more recently, they had a change in a CEO as well as big game plans to roll out their consumer goods segment, which ultimately means that they're going to be having a transformative 10 years focused on the medical devices and pharmaceutical segments. Now, I'm incredibly excited because at this point in time, Johnson & Johnson has a current P/E ratio sitting at 22.82, which means it is certainly ripe for picking. And not only that, but analysts are excited as they foresee Johnson & Johnson having those transformative years ahead and allowing that stock share price of theirs to grow, coming in at a median stock share price of $184 and a high stock share price at $215. Now, at this point in time, I only hold 36 total shares worth of Johnson & Johnson with an ultimate goal of getting it up to 100 total shares. However, with their dividend yield sitting at 2.36%, it allowed me to receive a dividend paycheck for $31.97. Moving right along to the 10th of the month, we are looking at Exxon Mobil, ticker symbol XOM. Exxon Mobil is a direct descendant of John D. Rockefeller's Standard Oil. It was founded back in 1999 as we know it. As of right now, they are just an absolute powerhouse within the industry, sitting at a market capitalization of $352 billion, not to mention an outstanding P/E ratio as we speak at a low of 15.46. So perhaps a ripe opportunity to jump in. And what excites me the most when it comes to Exxon Mobil is actually their future when it comes to green energy and green technology, making for a better, safer, greener tomorrow for all of us. Now, Exxon Mobil's greener future also excites analysts as they're coming in at a median stock share price of $89 per share, a high stock share price at $166 per share. Now, at this point in time, I only hold 3 shares worth of Exxon Mobil with a dividend yield coming in at 4.2%. Exxon Mobil sent me a dividend paycheck for $2.72. Now, jumping to the 15th of the month, we had quite the payday with 3 different dividend paychecks coming in. The very first dividend paycheck I want to talk about came in from McDonald's, ticker symbol MCD. Now, McDonald's, I am sure you are all well aware of, is the world's largest fast food chain. It is serving over 69 million customers on a daily basis in over 100 countries throughout their 37,000 plus outlets. Now, since their founding in 1955, it has certainly made an iconic brand name for itself, which only delivers a lot of confidence to me as an investor just to continue to invest in McDonald's and allow it to do its thing. Right now, we are talking about a market capitalization at $185.34 billion. McDonald's just going to continue to keep on leading. Now, at this point in time, I do think we should all be taking full advantage of the relatively low P/E ratio coming in at 24.84. Now, that is exactly what I did this past week as the stock share price fell to around $222 per share. I picked up another couple of shares of McDonald's. At this point in time, I hold 3 total shares. They have a dividend yield coming in at 2.22%, which allowed me to receive a dividend paycheck for $2.79. But I do have my eyes on the prize, that prize actually being the rebound of their stock share price. Analysts are projecting it's going to go right back up to a median stock share price of $281.50 and a high stock share price sitting at $306. And as for the other 2 dividend paychecks I received on the 15th, they were both coming in from REITs. Those are real estate investment trusts. The very first one I want to talk about came in from Stag Industrial, ticker symbol STAG. Stag Industrial was founded back in 2010. It is primarily focused on single-tenant industrial properties with a specific focus on warehouses, especially as we move into an e-commerce future. At this point in time, they have 517 properties spanning across the United States. We're talking about a company that is not as mature as other REITs. However, a market capitalization at $7.52 billion, a current P/E ratio sitting at 36.71. And while that's not exactly the lowest P/E ratio in the world, it has certainly come down from some of its highs over the past couple of months, coming down from around $47, $49 per share, where it's now hovering around $40 per share. That is, in my opinion, an opportunity for us longer-term value investors, especially as analysts only foresee a median stock share price coming back up to $47 per share and a high stock share price at $55 per share. Now, at this point in time, I only hold 24 total shares worth of Stag Industrial. However, I'm going to continue to build out my position with Stag as I foresee it taking off. Their current dividend yield is sitting at 3.46%, which allowed me to receive a dividend paycheck for $2.82. And as for the second REIT, we are talking about my REIT of choice that that I have doubled down on for the past 2 years, finally getting my position to 100 total shares. It is Realty Income, ticker symbol O. Realty Income was founded back in 1969. They have since then amassed a portfolio to over 11,000 properties spanning across the United States, Puerto Rico, the UK, and well into Spain. They're continuing on with their expansion with still a lot of growth ahead of itself. Now, in terms of reliability and diversification, we're talking about a REIT with over 1,040 clients and operating in over 60 different industries. Their current market capitalization is sitting at $41.92 billion. And while their PE ratio is rather high, sitting at 81, what I do like to see is that stock share price fluctuation. Take a look at their stock share price as it fell below $70 per share rather recently. That is exactly what I went ahead to double down on my position with Realty Income to get it to that 100 share count goal mark. Now, that dividend yield of theirs is sitting at 4.21%, which allowed me to ultimately receive a dividend paycheck from Realty Income for $24.82. Jumping to the 25th of the month, we had 2 dividend paychecks come in. These were the last 2 dividend paychecks that came in from individual stocks. The other 3 stocks I'm going to talk about are all index funds. However, the very first stock I want to talk about on the 25th here is Bank of America, ticker symbol BAC. Now, Bank of America is in fact America's second largest bank. It is JP Morgan Chase's largest competitor. They were founded back as we know it in 1998. It has since then built an empire of 4,300 branches across the United States with over 66 million customers, which is roughly 10% of the entire market. Now, over that same period of time, its market capitalization has continuously been growing. Right now, it is sitting at $329 billion, and very similar to banks across the board, it is going to perform well just as soon as these interest rates really begin to rise. Their current PE ratio is sitting at 11.46. Now, analysts only foresee continued growth for Bank of America, coming in at a median stock share price of $55 per share and a high stock share price sitting at $66 per share. With their current dividend yield coming in at 1.95%, I have an ultimate goal of getting to 100 total shares worth of Bank of America. I see it as a rock solid, very safe bank to invest in. Now, as of right now, I only have 28 shares, which allowed me to receive a dividend paycheck for $4.35. And last but not least, in terms of my individual stocks, we are talking now about Lockheed Martin, ticker symbol LMT. Lockheed Martin is an American aerospace arms defense and information security technology corporation with worldwide interest. After their founding in 1995, Lockheed quickly became a dominant defense contractor as it now leads the entire industry, sitting with a market capitalization at just over $118 billion and shows no signs worth of slowing down. As a matter of fact, just the other week, they secured yet another deal with the United States Army, this one for $1.6 billion for new radar systems. Their future is certainly bright, with analyst expectations also delivering through on continued growth, coming in at a median stock share price of $467 per share and a high stock share price sitting at $521 per share. At this point in time, I only hold 5 total shares worth of Lockheed Martin. Their dividend yield is coming in at 2.51%, which allowed me to receive a dividend paycheck for $14.11. And now, as for the last 3 remaining dividend paychecks that came in, they were scattered about through index funds. The very first fund I want to talk about is a Vanguard Dividend Index Fund. It is Vanguard's High Yield Dividend Index. We're talking about VYM. Now, this particular index, of course, focuses on dividend-paying companies within the fund itself. It has a total of 410 stocks within the fund, ranging from some of the best well-known dividend stocks from Johnson & Johnson, JP Morgan, Bank of America, Home Depot, Procter & Gamble, you name it. I guarantee you it is probably within this particular fund. Now, I actually do not have a whole lot of shares worth of VYM, only 3 to be exact. I'm a bigger fan of the next 2 indexes that I'm about to talk about that cover the broad market. Nonetheless, it has an average dividend yield of 2.79%, and I got paid a dividend paycheck for $2.02. But as for these broad market funds, we're talking about Vanguard's Total Stock Market Index Fund, ticker symbol VTI. We're also talking about Vanguard's Total Stock Market Index Fund, Admiral Shares. This one is ticker symbol VTSAX. Both of these funds are essentially the same thing, so I'm going to talk about them in tandem, as it literally gives investors exposure to essentially the entire US stock market. Again, 4,000 plus stocks within these funds, ranging from small, mid, and large caps, and allowing us to invest in both growth and value investments within them. So companies ranging from your Apples, Microsofts, Googles, Teslas, to more of the value plays like United Healthcare, Johnson & Johnson, and Berkshire Hathaway. You cannot go wrong with VTI nor VTSAX, in my opinion. When it comes to VTI, I currently hold 40 total shares that has an average dividend yield of 1.51%, which ultimately allowed me to receive a dividend paycheck for $27.60 $2.63. Now, on the other hand, when it comes to VTSAX, I have 225 shares. That is an average dividend yield of 1.29%, and it allowed me to receive a whopping $76.78. And now finally, for the moment we have all been waiting for, or at least I certainly have been, the big reveal. Make some noise because we broke yet another record here in the month of March, bringing in $207.05 for doing literally nothing other than doubling down on high quality dividend investments. That is exactly the power of dividend investments. Now I want to take you right over to the dividend spreadsheet where you can see here, as we enter in $207.05, that brings us to a year-to-date total of $310.04. That is 37% of the way to $817, which is the yearly total that we brought in last year. So we're certainly making headway in surpassing $817, but more so even in smashing our goal and bringing in over $1,000 worth of dividends come the end of the year. Just before we close out, I'd certainly love to know how much you've brought in this past month of March, your highest paying dividend stocks. Drop all those comments below to let me know. Most importantly is understanding that I am not a financial advisor, so always do your due diligence prior to making any investment decisions after my videos. And of course, tap on that thumbs up button and help me grow this channel. And while you're at it, make sure you go ahead, subscribe to the channel. I'd certainly love for each and every one of you to be on this journey with me. Now YouTube, until the next video, I will see you all there.